Hey everyone, my name is Robert Fojo, and I am the Vice President of Sales for Max Value Processing. We are a payment technology and merchant services company based in Beverly, Massachusetts. I'm really excited to provide you with a lot of helpful information about PCI compliance and what that highly mysterious term means for businesses. And this will help you understand a little bit better how you can pay more attention to this concept while you operate your business. So I'm going to cover a few things in this video. One is just a brief introduction into what PCI compliance is, what your obligations are as business owners, and then I'm going to walk through the different levels of PCI compliance so that you can ensure your understanding of what those levels are and which one of those levels applies to you. I'm also going to review what our role as payment processing companies is with respect to PCI compliance. I'm going to go through the consequences of noncompliance, what those costs of noncompliance are. Many of you have probably experienced those costs already. And I'm also going to highlight the benefits of compliance because there is a flip side to that coin. And then I'm going to walk through some best practices for ensuring that you are compliant with respect to PCI. All right, so let's jump right into it. So what is PCI compliance? Well, it refers to adherence to a set of security standards established by the Payment Card Industry Security Standards Council, or the PCI SSI. That is a global forum that brings together payments industry stakeholders to develop and drive the adoption of data security standards and resources for safe payments worldwide. It was formed by the card network, specifically Amex, Discover, JCB, MasterCard, and Visa on September 7, 2006. The PCI Data Security Standards, or PCI DSS, consists of 12 significant requirements, including multiple sub-requirements, which contain numerous directives against which businesses may measure their own payment card security policies, procedures, and guidelines. These standards are designed to protect cardholder data during payment transactions, thereby reducing the risk of data breaches and fraudulent activities. Compliance with these standards ensures that businesses maintain a secure environment for processing, storing, and transmitting credit card information. Now, the importance of PCI compliance cannot be overstated in today's digital landscape. With the proliferation of online transactions and the increasing sophistication of cyber threats, businesses have to prioritize the security of customer data. Failure to comply with PCI standards not only exposes businesses to the risk of data breaches, but it also undermines customer trust in your business, and it can result in significant financial and reputational damage. So I'm going to get into this a little bit more specifically. Generally speaking, businesses that process credit card payments are obligated to comply with PCI DSS requirements. And these requirements include implementing robust security measures to protect cardholder data, regularly assessing and testing those security systems and processes, maintaining a secure network infrastructure, including firewalls and encryption protocols, restricting access to cardholder information on a need-to-know basis, monitoring and auditing systems to detect and respond to security breaches promptly. The failure to fulfill these obligations can result in noncompliance penalties, legal liabilities, and damage to your brand's reputation. Now, all service providers and merchants that store, transmit, or process credit card information have to adhere to PCI DSS standards. However, they don't all have to follow an identical route to PCI compliance. The degree of risk that an organization is met with varies according to several factors. So given this, the PCI Security Standards Council created 2 PCI compliance levels that apply to service providers and 4 for merchants. The level that an organization is delegated to varies according to a couple of factors. Number one, the number of credit card transactions processed every year, and if the organization has experienced a cyber attack or a breach leading to compromised cardholder or credit card information. So generally speaking, putting aside any history of prior breaches, okay, PCI DSS standards outline 4 levels of compliance. based on the volume of credit card transactions processed by a merchant or service provider annually. Now, these levels determine the specific validation requirements and reporting obligations for achieving and maintaining PCI compliance. So we've got 4 levels. Okay, level 1 applies to merchants that process more than 6 million card transactions annually. So, for example, large retailers operating in multiple countries. I put as an example here Walmart. Level 1 requires these merchants to use a third-party auditor. External audits are performed by what are called qualified security assessors, or QSAs. And this type of auditor must be approved by the PCI SSC to conduct a thorough on-site review of the organization's practices to ensure compliance. That QSA defines the scope of the audit, reviews the organization's written records and data storage, and determines PCI compliance. That auditor then details the findings in what's called a report on compliance, or ROC. Additional requirements for level 1 merchants also include quarterly network scans. These scans are a type of minor audit and are performed by approved scanning vendors, or ASVs. These network scans can be performed remotely, and they're not as detailed as those full annual assessments. And then the other requirement is what's called an attestation of compliance form. So this is an opportunity to explain the organization's compliance efforts to the PCI SSC authority. Unlike external audits, the attestation of compliance is written and it's submitted by internal staff. So it's a little bit less rigorous. Level 2 applies to organizations that process between 1 and 6 million transactions per year. So, for example, a small to medium-sized enterprise operating in active trade areas or across state or provincial lines. So in this instance, I use an example of a restaurant chain in my area in New England called Burton's Grill. They have like 10 to 12 locations between Massachusetts and New Hampshire. So these level 2 merchants, they have to submit what's called a report on compliance, or that ROC that I mentioned in the prior slide, but it's not performed by an internal, but it's not performed by an external third party. Rather, it can be performed by an internal evaluation, right? So it's not an external audit. That internal evaluation is guided by what's called a self-assessment questionnaire, an SAQ, and that's provided by the PCI SSC. And I'll get into the SAQ in a couple of minutes. While a level 2 merchant does not need to involve a QSA, they still need to demonstrate that they have implemented all PCI compliance guidelines. So like level 1 merchants, they have to perform quarterly network scans by an ASV, and they have to submit that attestation of compliance. Level 3. Level 3 applies to merchants that process between 20,000 and 1 million transactions each year. So, for example, small to medium-sized businesses operating in a local area. I use an example here, Jordan's Furniture. They're a pretty large furniture retailer up here, but they have just several locations. They do high-ticket items, and the number of transactions that they process falls within this range. These level 3 merchants do not need to perform an external audit, okay, but they and do not need to submit that report of compliance. However, they can do so voluntarily to improve their standing with customers or ensure their cardholder data is secure. And apart from that, they face the same requirements as level 2 merchants, and that is they have the annual self-assessment questionnaire that they have to submit, and they have to do a quarterly scan of their network performed by an ASV, and they also have to submit an attestation of compliance. And finally, level 4. Now, this is most businesses. If you're a small to medium-sized business, you fall into this bucket. And this is really any merchant processing fewer than 20,000 e-commerce transactions per year, and all of the merchants, regardless of acceptance channel, processing up to 1 million Visa transactions per year. So, for, again, a small local business falls into this bucket. Most of you fall into this bucket. Now, unlike the higher levels of PCI compliance that I just reviewed in the prior slides, PCI DSS level 4 merchants do not require audits. You don't have to submit an ROC, and you may not need an AOC forms either. Organizations at this level are mainly faced with meeting the PCI requirements of their bank. The requirements typically include using only qualified integrators and resellers to install, integrate, and service your point-of-sale equipment and your applications. You have to perform the annual self-assessment questionnaire. You have to complete that and submit it. and you should be performing quarterly network scans with an ASV as well. So generally speaking, merchant account providers and processing companies like us, we play a very pivotal role in ensuring PCI compliance with our merchants. We can facilitate compliance through several measures. Number one, we provide guidance and resources to help you understand and implement these requirements. Number two, we offer payment processing solutions that are secure and adhere to these standards. So in doing so, we do a lot of the work for you. We also conduct regular assessments and audits to verify compliance and identify areas for improvement. So we look at all of our platforms and all of our solutions, and we assess whether they are compliant. And we also play a role in educating business owners and merchants on best practices for maintaining a secure payment environment. We also enforce contractual obligations related to PCI compliance, and we unfortunately have to impose penalties for non-compliance. So by actively engaging with merchants and promoting a culture of security, we, as merchant account providers and processing companies, we contribute to this overall integrity of the payment ecosystem. Credit card networks, processors, and gateways all play significant roles. Okay, so I generally described what our role is as providers. Let me walk through the different responsibilities that all of these players have. So we have credit card companies and card networks, payment processors, and then payment gateways. Each of these entities has specific responsibilities and obligations to ensure the security of cardholder data and compliance with PCI DSS requirements. So the card networks, so I'm talking Visa, MasterCard, American Express, Discover, they establish the overarching rules and standards for payment card transactions. They define the PCI DSS requirements that businesses have to adhere to in order to process card transactions. They enforce compliance with PCI DSS requirements through various means, including penalties, fines, and mandates. And they also provide resources and support to merchants and service providers to help them understand and implement PCI DSS requirements effectively. Payment processors, that's us, we act as intermediaries, okay, between you, the merchant, and the card networks, and we facilitate authorizations, processing, and the settlement of your credit card transactions. We are also responsible for ensuring the security of cardholder data while it is in transit between your point of sale and the card networks. We also have to comply with PCI DSS requirements that are relevant to our role in the payment processing ecosystem, such as implementing secure network connections, encrypting card data, and maintaining secure data storage practices. We also have to provide merchants with tools and solutions to help you achieve and maintain PCI compliance, such as secure payment gateways and tokenization services. Now, payment gateways are software platforms or services that securely transmit credit card information from your website or point of sale system to us, the processor, and then the card networks. Payment gateways play a critical role in ensuring the security of online transactions by encrypting card data during transmission and implementing fraud detection measures. They also have to adhere to PCI DSS requirements related to the transmission of cardholder data, their encryption protocols, and their own vulnerability management. Payment gateways offer features and functionalities that are designed to assist businesses in achieving PCI compliance. So, for example, they offer other features like hosted payment pages. They offer tokenization. That's a big functionality these days. And they also offer secure data storage options. So overall, the card networks, we the processors, and gateways, we share a collective responsibility to protect cardholder data and maintain compliance with PCI DSS requirements throughout the payment processing lifecycle. In fulfilling our obligations and collaborating with you, the merchants, and we contribute to the overall security and integrity of the payment card ecosystem. Let's talk about the SAQ, the Self-Assessment Questionnaire. So this is a tool provided by the PCI SSC to help merchants and service providers assess their compliance with the payment card data security standard requirements. This questionnaire consists of a series of questions covering various aspects of security controls and practices related to the handling of credit card data. Now, there are several different versions of the SAQ. Each one of them is tailored to different types of businesses and payment processing environments. The specific version of the SAQ that a business is required to complete depends on factors such as the method of card data processing, the volume of transactions, and the extent of the business's involvement in handling cardholder data. This questionnaire is designed to be completed by merchants and service providers themselves without the need for a third-party assessor. So it helps businesses evaluate their compliance status by identifying the areas where they may need to implement additional security measures or improve existing practices. So the questions in the questionnaire cover a wide range of topics, including network security, access controls, encryption, vulnerability management, and physical security. Depending on the version of the questionnaire being used, businesses may be required to provide evidence of compliance, such as documentation or policies that they may have in place or reports from security scans. Once the questionnaire has been completed, businesses are required to submit it to their acquiring bank or the payment card brand as part of the PCI compliance validation process. Now, acquiring banks and payment card brands use the information provided in the questionnaire to assess the business's compliance status and determine whether any additional steps are necessary to achieve and maintain compliance. Overall, this questionnaire is a valuable tool for helping businesses assess their compliance with PCI DSS requirements and to take steps to protect cardholder data and ensure the security of payment card transactions. Now, one question I get a lot from business owners is, can we self-monitor? Can we do our own PCI compliance? And you can to a certain extent. In most cases, businesses will need to engage with an outside source to validate their compliance. Now, the level of external involvement required depends on factors such as the size of the business, the complexity of its payment processing environment, and the specific requirements of the PCI DSS. For smaller businesses with relatively simple payment processing setups, self-monitoring may be sufficient to ensure compliance. Now, these businesses can use tools such as that questionnaire to assess their compliance status and implement necessary security measures independently. However, for larger businesses or those with more complex payment processing environments, external validation of PCI compliance is typically required. This validation may involve engaging with a qualified security assessor or using an approved scanning vendor to conduct security assessments and audits, and I explained all that earlier. Again, a QSA is a third-party organization that has been certified by the PCI SSC to assess compliance with applicable requirements. They conduct comprehensive reviews of a business's security controls, policies, and procedures to determine whether they meet the standards outlined in the PCI DSS. An ASV, on the other hand, is a third-party organization that specializes in conducting vulnerability scans of the business's network and systems. These scans help identify potential security vulnerabilities that could expose cardholder data to risk and must be conducted regularly as part of the PCI compliance validation process. In addition to QSAs and ASVs, businesses may also need to engage with their acquiring bank or their payment card brand to validate their compliance with PCI DSS requirements. Acquiring banks and card brands may also have their own validation processes and requirements that businesses have to adhere to in order to maintain compliance. So in summary, while self-monitoring can be part of PCI compliance efforts, most businesses, the larger ones, the ones with more complex payment processing systems, will need to engage with outside sources such as QSAs, ASVs, and acquiring banks to validate their compliance with requirements effectively. And these external resources provide the necessary expertise and guidance to help businesses achieve and maintain compliance and ensure the security of payment card transactions. Now, there are several consequences of noncompliance, and many of you have probably experienced these already. Noncompliance can result in financial penalties imposed by card networks and regulatory authorities. If you've ever seen that PCI noncompliance fee on your merchant statement, that's one of these penalties. And these penalties can vary depending on the severity of the violation and the volume of transactions processed by the business. Now, in addition to monetary fines, businesses can also incur indirect costs such as legal fees, like if you get sued, remediation expenses, and the loss of business opportunities. I mean, you can lose business if you're subject to a data breach. The failure to adhere to these standards can damage your brand reputation as well and lead to a loss of customer trust. So these are all indirect costs that you want to avoid. It's not just limited to that PCI non-compliance fee. There are often other indirect costs that may result from a data breach of some kind. The most common monetary penalty for not being PCI compliant, as I mentioned, is this PCI non-compliance fee. Now, it's usually a monthly fee of some kind, $99 to $250 per month. It's usually the range that I've seen. And it's assessed when you don't complete that SAQ, that questionnaire that you receive on an annual basis. The first time you receive that is when you set up your merchant account. This is where processing companies usually do a terrible job of helping their merchants avoid these fees. Now, you will normally receive the SAQ in an email. A lot of people just ignore it because they ignore their email, or they don't understand something. So they overlook it. They consider it spam. They don't complete the questionnaire, and then they get hit with one of these fees the next month and every month after that. Another way processing companies do a terrible job is that they don't help their merchants fill these questionnaires out. It can be somewhat of a complicated set of questions, and a lot of small business owners, it can look like a foreign language to them. So, what we do, at least at my company, what we do is when we set up a merchant, we alert them to the fact that they receive this questionnaire, and in some instances, we will, if they need it, we will fill it out for them, assuming that we have all the information that we need, and we'll walk them through it. But if the merchant needs, to fill it out themselves, we'll get on the phone with them, we'll help them do it, and we'll do that every year. And that fee, by the way, this non-compliance fee, it's assessed by the card brands or our acquiring bank, and but it's usually passed right through to the merchant. It's not something that we assess, but it's also not something we want to absorb on your behalf. So we make sure that this questionnaire gets done, right? A lot of processors, unfortunately, don't do that, and they don't care. So to make matters worse, they'll often take this fee and then they'll pad it so that they make a profit off it themselves. And that's a very icky practice, in my opinion. So if you have one of these fees showing up every month, call your processing rep, your payments rep. Ask them to send you the SAQ and ask them for help in filling it out. You can also call me. I'm happy to help. My contact information is at the beginning of this video. It's also going to show up at the end. I did this the other day. A small carpet company, one of our agents, tried really hard to get the owner's attention to fill out the questionnaire. The owner ignored him. And you can lead a horse to the water, but you can't make them drink. The following month, the owner gets assessed with a $90 PCI non-compliance fee. We don't pad or profit off these fees, but it passes right through the merchant. It's not coming from us. So the owner flagged it, called our agent. We simply had the questionnaire form resent to his email, and my agent got with him and helped him fill it out. So make sure you have a good agent, someone you trust, someone who's dependable and reliable that you can get a hold of so you can take care of this requirement when it applies. It's important to understand, though, that in our digital age, you need to maintain a level of security in your business. These requirements are important. It's not something that you should overlook, and we need to take them seriously. Data breaches happen all the time. If your business suffers a data breach, you have some immediate and potentially long-term issues that I just alluded to earlier. You'll immediately have to report the breach, depending on whether your state's laws require that you do so. You may have to inform customers that their data ended up in a breach. I have a mortgage company that I know, they had a data breach. There's a law in that state that requires that the owner of that business notify each customer whose data was leaked that happened. So these statutory requirements kick in once this happens. And then, of course, you have to take the necessary measures to fix the breach. Was there something wrong with your network? Did you not have a firewall in place? Was card information mishandled? Did an employee access your point-of-sale system and steal any information? You will have to remediate these issues. And finally, if this data breach led to someone's card information being used fraudulently, you may have legal exposure, and you can get sued. You have to spend money on legal fees, potentially have to endure judgment against you. So this stuff is serious. It's very important to take this seriously. The bottom line is these requirements, they're a pain in the you-know-what, but they're important. They reduce or eliminate the risks we just identified, but they also build customer trust and enhance your reputation. It should be part of your long-term success as a business. So to review some best practices, make sure you have the right system in place. Audit your system regularly to make sure that there are no potential holes or risks of exposure. Take your questionnaire seriously, that SAQ, take it seriously. Make sure you accurately answer all those questions in a manner that ensures that you are adhering to security standards, and educate your employees on the importance of PCI compliance and handling cardholder data securely. For example, I set up an aluminum company in New York some time back. They had an old website with an old e-commerce setup. They had it set up so a customer would place an order on the website, but the shopping cart wouldn't charge the card, right? The business owner set it up that way so that she could review her inventory and determine whether they had the materials that were ordered in stock. Then what she would do is the system would allow her to print out the card information, and she would walk over to a physical card terminal and key in the card number and charge the card. That is not PCI compliant. Just think, all someone has to do is steal one of those printouts and then run amok with that card, and you have all sorts of problems. So we set them up with a much better gateway integration on a new website where it would authorize and capture the card information, but then tokenize it rather than store it. And then she would just go back in and tap a button. It would charge the card without revealing the card information. Much more compliant. So thank you very much. I hope this information was helpful, and it helps clarify this mystery about PCI compliance. If you have any questions, any guidance, you need any clarification on any of the issues we discuss, please feel free to give me a call, shoot me an email. My contact information is on the screen, and I'd be happy to help you out and walk you through any of these issues anew. Thank you.